All right, we need to talk. There is a brand new, pretty significant, and get this temporary change coming to the tax code, and it could mean substantial savings for Americans over the age of 65. So, in this explainer, we are going to break down this new deduction that's about to go live for just a 4 year period. Our goal here is simple to give you the straight scoop on what it is, who actually qualifies, and what it could mean for your money in retirement. This isn't about hype, it's about understanding the rules so you can make some really smart decisions. So, is this for real? A new tax break specifically for seniors? Yes, it is exactly that. It's a new provision, and it's designed to give a temporary but really significant boost to the total amount that older taxpayers can deduct from their income. And, when it comes to taxes, the devil is always in the details. So, understanding exactly how this thing works is the absolute key to unlocking those savings and making it work for your financial plan. Let's just jump right to the big number that everyone's talking about, $12,000. So, what is that? That's the potential extra deduction for a married couple filing their taxes together where both of them are 65 or older. If you're a single filer, that number is $6,000. Now, I have to emphasize this is a huge bonus on top of the deductions that seniors already get. It's not replacing anything, it's adding to it. Okay? So here's how we're going to break it all down. First, we'll nail down exactly what this new deduction is. Then we're going to do the math and see what it could actually be worth to you. After that, we'll get into the fine print, the limits, the rules, the stuff you have to know. Then we'll walk through how to claim it, clear up a big myth about Social Security, and finally talk about this very specific 4 year window and how to plan for it. So, first up, this new senior deduction. Let's get into what the rule actually is, where it even came from, and why, honestly, it's a pretty big game changer, even if it is only temporary. So, this new rule is basically a temporary extra tax deduction, specifically for anyone aged 65 and up. It was actually part of a much bigger tax reform package. And the whole idea was to provide some financial relief, especially for seniors who are often on more fixed incomes. Instead of some fancy name, it's easier to just think of it as a senior bonus deduction. It's an extra layer of tax savings, but only for a specific group and only for a limited time. Now, here's the secret sauce. This is what makes this so powerful. The key is that it stacks. It's not a replacement for anything. You get this on top of the regular standard deduction everyone gets, and you also get it on top of that extra deduction folks who are 65 and older already receive. This stacking effect, piling one deduction on top of another, is exactly why the total amount you can write off can get so incredibly high. Okay, now for the fun part, let's actually calculate the benefit. Seeing the numbers laid out like this really shows the kind of impact this can have on how much of your hard earned money is actually taxed by the federal government. This is where we go from theory to your wallet. All right, let's run the numbers for a single person who's over 65. We're going to use the projected figures for 2025 here. You'd start with the standard deduction, which is around $15,550. Then you add the existing age-based deduction, which is another $2,000. And then you stack on the new $6,000 temporary bonus. You add it all up and boom, 23,750. That whole chunk of your income is now shielded from federal income tax. And if you thought that was good, just wait. For married couples over 65 who file jointly, the benefit gets even bigger. Because a lot of these deductions apply to each person. The numbers, well, they get kind of wild. Let's build this thing up piece by piece. First, you've got the standard deduction for married couples filing jointly, projected to be $29,200. Then, because both spouses are over 65, they each get that age-based deduction. So that's another $3,200. And finally, you add the new senior bonus, 6 grand for each spouse for a grand total of $12,000. And the grand total is 44 white $400. Just let that sink in. For retirees who are watching every penny, having almost 45 grand of income completely shielded from federal taxes, that can make a massive difference in your annual budget and how long your savings last. It basically creates a much, much bigger super cent tax bracket for people who qualify. And here's another really great feature. It's super flexible. You get this deduction whether you itemize, listing things like mortgage interest and charity, or if you just take this simple standard deduction. This is huge because it makes it available to almost everyone, no matter what their specific financial situation looks like. Now, of course, with any tax rule that sounds this good, there are some important limits you've got to understand. So now let's get into the nitty gritty, the eligibility requirements, how long this program actually lasts, and the income rules that could change how much you get. Okay, this part is absolutely critical. This is not a permanent change. I repeat, not permanent. It's only authorized for the tax years 2025 through 2028. That's it. This creates a very specific 4 year window of opportunity. This kind of temporary rule is pretty common, designed for short term relief, but for you, it means that any long term planning has to take into account that this benefit is scheduled to just disappear after the 2028 tax season. The other big limit is your income. This benefit is really aimed at low and middle income seniors. So it starts to phase out once your income hits a certain level. For single filers, that phase out starts at 75 grand, and the benefit is completely gone at 175,000. For married couples, it starts at a 50 grand and disappears entirely at 250,000. And just a quick note, this is based on your adjusted gross income or AGI. So, how does that phase out actually work? Well, the formula is pretty specific. For every $1,000 of income you have above that starting line, your bonus deduction gets reduced by $60. So let's say you're a single filer making $85,000. That's 10 grand over the limit. So your $6,000 deduction would get reduced by 600 bucks. That's 60 bucks for each of those $10,000 steps, leaving you with a still pretty good partial deduction of $5,400. All right, let's shift gears to the practical stuff. How do you actually claim this deduction? It's really important to know that this is not automatic. You have to actively claim it on your tax return to get it. The good news, the process is meant to be pretty simple. There are basically three key steps. First, you'll want to use Form 1040 SR. That's the version of the main tax form that's designed for seniors. It's got bigger print, which is nice. Second, you have to check the box on that form that says you're 65 or older. That's the trigger. And finally, you'll calculate the actual deduction on a brand new form that the IRS is going to release just for this. So keep an eye out for that new schedule when you're filing your 2025 return. Next, we absolutely have to clear up a big potential misunderstanding when it comes to Social Security. Whenever a new deduction comes out, a myth starts floating around that it can make things like Social Security completely tax free. Let's look at the reality of how this all works. So let's be crystal clear. The idea that this deduction just erases the tax on your Social Security, that's a myth. It's false. Here's what it actually does. It lowers your overall adjusted gross income. Now, the tax on your Social Security is figured out using a whole separate calculation. But since this new deduction lowers your AGI, it might indirectly lower the number used in that Social Security calculation. For some people, that could be enough to reduce the taxable portion of their benefits, but it's an indirect effect, not a direct get out of tax free card. All right, let's bring it all home and talk about the strategy here. This 4 year financial window, understanding that this rule has an expiration date, is so important for planning your retirement over the next few years. It gives you a limited time opportunity to maybe move some things around and make the most of it. So, what does this actually mean in your pocket? I mean, a deduction isn't cash, right? Well, it leads to cash. If you're a single filer getting that full $6,000 deduction and you're in the 22% federal tax bracket, that translates to about $1,320 in actual tax savings. Cold, hard cash that doesn't go to the IRS. And over the 4 years this program is active, that could add up to over $5,000. That's real money for healthcare, for bills, for anything. Okay, that was a ton of information. Let's do a super quick recap of the absolute must-nos. 1, you've got to be 65 or older. 2, you can get it even if you're still working part-time as long as you're under the income limits. 3, it's super flexible. Works for both standard and itemized filers. 4, watch those income phase-out limits very carefully. And 5, the most critical point of all, remember this is temporary. 2025 to 2028 only. And I have to end with a really important warning. Please be careful out there. Whenever news like this breaks, the scammers come out of the woodwork. They'll call you, they'll email you offering to help you claim this deduction for a fee. You do not need to pay them a cent. All the forms, all the information, it will all be available for free directly from the IRS. Any good tax software or a tax pro will build this right into their process. Don't get taken. So, this brings us to the final thought. With this benefit set to expire after the 2028 tax year, you have a clear 4 year window of opportunity. This isn't just a one time thing, it's a multi year advantage that you can plan around. So, the real question to ask yourself is how can I strategically adjust my financial plan? Things like Roth conversions or when I take capital gains to make the absolute most of this temporary tax break while I have the chance.